Hey guys, welcome back to the channel. It's me, Adam, and you're watching Unlimited Options Investing. Alright, in this video, I want to talk about some calls that I sold against my long positions in both Apple and Microsoft. Both companies reported earnings this week. Actually, Apple's reporting today after the close, and Microsoft reported after the close, I believe, on Tuesday. There's been a lot of volatility in the markets as a result of the Fed's balance sheet, as well as interest rate hikes that are coming as soon as March. We don't know how aggressively they're going to be increasing the rates, so the markets have been freaking out. We don't know where the bottom is, as we've been having a pretty rough sell-off with the NASDAQ, the S&P 500, anything risk on, crypto, Bitcoin, Ethereum. Semiconductors have been getting hit, Nvidia, AMD, financials, JP Morgan, Citigroup. However, the only sector that's been doing pretty alright has been energy, and that makes sense because oil has been going up in recent weeks. So while all this devastation is happening and everyone's portfolios are crumbling down, in the meantime, taking advantage of a market that's going sideways or down, you can sell calls against your positions and profit off the volatility. And similar to buying low and selling high with regular stock, when it comes to volatility and options, you want to buy when volatility is low and sell when volatility is high. That's what I'm trying to do to take advantage of the current market conditions, taking advantage of short-term volatility and trying to profit off it, at least in the short term, while I'm waiting for my investments to go up over the long term that I have no problem holding. Apple and Microsoft were the two companies that I sold calls against this week. I was going to sell a call against Facebook or Meta platforms today, and I was going to sell it right at the high, and right when I was trying to execute the trade, the bid-ask spread just gapped down and I missed it, and then it messed with my psychology, and at that point I didn't want to take the trade because it was going to mess with me. And when that happens, I just step away from the computer. I say, I'm not going to do it. And you know what? I'm happy I did that, because I'd rather walk into a trade confident, knowing exactly what I want to do, instead of chasing it when it goes against me very quickly. Alright, let's get right into specifics. Before we do, if this is your first time on the channel, welcome aboard and hit that subscribe button. Here at Unlimited Options Investing, we talk everything from stocks, crypto, options, ETFs, and we're investing for the long term. As always, smash that like button. Let's get started. Alright, so the first thing I want to pay our attention to is the NASDAQ, the QQQ on the 4-hour time frame. We have been in a vicious downtrend, so I drew this downtrend over here, that every time we hit against it, we find selling pressure. This happened on the 26th of January, as well as the 20th of January, and the 13th of January. So we opened up today right next to it. So this was my first indication, you know what, it would be a decent opportunity to sell calls, because if we break through this, okay, fine. How high can we realistically go by tomorrow's close on Friday? So we have an area of interest over here around 360 where the 20 EMA is, and this 50 EMA around 372. The 50 EMA, I didn't think we'd get there by Friday. The 20 EMA maybe. But as we can see, the downtrend stayed intact, and we sold off to about 340. Right now we're about 342. As a side note, moving forward, if we're able to push the downtrend, move back, find support on the downtrend, and then continue moving higher, this could start confirming a double bottom pattern that we see over here, especially if we break this 360 mark. The main idea is that we want to see higher lows and higher highs. Alright, so firstly on Microsoft, I sold a call at the end of the day on January 25th, right before they reported their earnings. I sold a 320 call right near that 50 EMA. So I sold a 320 call expiring this Friday on January 28th for $142, so $142 per contract. What happened was Microsoft reported good earnings. They had a double beat, and it gapped up to about 308, and even at that time, my covered call was still profitable because the IV had crushed, the volatility had gone down after the earnings, and even though the intrinsic value went up, the extrinsic value got depleted out of the contract. And what I ended up doing once Microsoft was around maybe 303 before the Fed meeting, in hindsight, I wish I had kept the call, and I wish I had sold even more calls, but again, hindsight is 2020. And I bought it back for 52 cents per contract, so $52, so for a net profit of $90 per contract. Moving on to today on Thursday, so I saw that we were near the 20 EMA in the morning, and what we've been seeing whenever there's been a rip in the market, it's been sold off time and time again until we get some kind of conviction in the close. We just keep on selling the rips higher. Again, in line with the downtrend of the QQQ and Microsoft and Apple being the two biggest companies making up that index. In my opinion, this 307 level, this 20 EMA, is strong resistance until we break it. This is why I was willing to take the risk on selling the 315 calls in the morning when we were at about 306. When we were hovering for about $306 per share, I sold it for 51 cents per contract, $51, and I ended up buying it back later on in the day as Microsoft stock had gone down for 13 cents per contract, netting again $38 per contract. But then what did I immediately do? I then went and sold the 310 call for 54 cents per contract, again $54 netting, and I haven't bought it back yet. I'm most likely going to be holding this until the close on Friday. When it comes to Apple, similar, we were near the top of this ascending channel that we had been in for a very long time. We did break above it at the end of November, early December, when we were having a lot of volatility in the markets because of the Omicron variant. But leading the way in the January 22 sell-off is Apple, when we reached highs of about $182 per share when we were at $300 trillion valuation, now sitting at about $160, $159 per share back into this channel. Not to mention we had also sold off from these levels yesterday. Today after hours is earnings, and we also have the moving averages as dynamic resistance. Any covered call that I sell, I take the risk of, am I willing to sell this stock at this price if it hits it by the end of the week, and I have to be comfortable with it hitting that price. And it's difficult because you have to be honest with yourself. If you're being greedy, where would you be happy at the end of the week if your stock got to this price, and are you happy with the premium? So when Apple was about $163, I sold the call for about $1.39, $139, expiring tomorrow, January 28th, at the 167.5 call. I do know that right now, because we are trading lower than when I sold it for, I am up on my position, maybe 30%. I am going to be holding it until after earnings. Like Microsoft, that we're going to have an IV crush tomorrow, as long as we don't gap up above the moving averages. I should be able to buy this one back or hold it until expiration at a much lower price than I sold it for. Alright, and that's the end of my video. Thank you very much for watching. As always, let me know in the comments below, are you profiting off any covered calls or any kind of options trade? As always, subscribe and like, and I'll see you after those Apple earnings.